Earlier this week, Apple released an investor update on quarterly guidance for Q2 2020. In other words, the revenue and other financial projections they'd given last quarter to set expectations for this quarter. Now, Apple is getting out ahead here, one of the first major American companies to do so. But they won't be the last. The reason for the update was COVID-19, commonly referred to as the coronavirus, and in addition to its terrible impact on the communities and people in China, on its impact on Apple's productions and retail operations therein. Now, while Apple said they will no longer meet the previously projected guidance, and that iPhone supply shortages will temporarily affect revenues worldwide, and that store closures would affect retail demand in China, Apple hasn't provided any new numbers.
I think to a certain extent, it wasn't that surprising. We had gotten reports in the days leading up to Apple's removal of guidance that things were not going as expected. Primarily, Foxconn and other Apple partners and suppliers were taking longer to get production back up. And I think it was pretty clear that Apple's guidance was reliant on getting that iPhone production back online. So as the news reports started to get what I would say more dire, or at least it seemed like the situation was getting more unclear, I think more and more people were expecting that that guidance range was going to be at risk. And that's exactly what happened. So Apple stepped away from that guidance. They did not provide updated guidance just because of the situation is just so fluid. My expectation is we'll see how the quarter goes, maybe after the quarter ends, but before Apple reports earnings. It's possible maybe Apple has more to say at that time, just to sort of help the market digest all that's going on. If there's one thing about Wall Street, it's that it hates unknown. Yes. And it doesn't like shocks to the system. And so this is something that Apple and really any public company tries to do, in which you're trying to guide expectations along. And if they sense that maybe expectations are getting maybe either too negative or maybe even too positive, they can come out with certain information to help kind of guide those expectations in a certain way.
So one of the things we saw almost immediately with the coverage was, for the second year in a row, which I think in some people's minds linked what Apple said last year to what they said this year, even though the reasons for why they were saying it was different. Was there any relation in your thinking?
I don't think so. When you look at Apple's business now versus just 12 months ago, you do see quite a bit of change. The iPhone business is definitely in a different place. I tend to think it is more upbeat. I tend to think that you have an upgrade cycle that is starting to help Apple, or at least an upgrade cycle that is stabilizing. Yeah. Last year at this time, I think there were more questions over upgrading trends. You did have trade tensions. I do think that was an issue. I don't think that was the only issue, but there were other companies out there talking very similar to what Tim Cook was saying. So I think there is truth to that. And then, of course, now you really do have a completely different situation, which you have a health crisis that's impacting tens of millions, if not hundreds of millions of people. It's a more fluid situation. It's not just specific to Apple. It's not specific to companies in a certain segment of, say, the smartphone market or even the computer market. I mean, this is something that is impacting mostly, I think it's fair to say, all companies. And I think there's fears that this is starting to impact the global economy when you consider tourism, when you have flights that are canceled or essentially banned from countries to countries. You're going to have an impact that is going to take weeks, if probably months, to play out. And so I do think they're very different situations. And then if you're looking at it from a stock perspective, it's a very different situation, because that first guidance revision back in 2019, that came after Apple's shares had gone, they had experienced quite a bit of pressure. And there were fears that there was a global economic slowdown taking place. I think there were fears that trade tensions were just getting way too out of hand. Now you have a situation where Apple and most of the large giants on Wall Street, they're trading near all-time highs. Valuations are a lot higher. I think the optimism in this market is different. I think there's people who think maybe the Fed will kind of backstop any weakness from coronavirus. And so we're in a very different spot, both just from Apple's perspective, but also the overall market.
So one of the interesting things to me too is that some of the early articles about it, even in business publications, tried to link Apple having a manufacturing center in China as a dependency, and that this was sort of the consequence of that, which I thought was really strange. And I know a mutual friend of ours, Horace Dedya, said none of his Apple models ever included the idea of a meteorite striking Silicon Valley. Is that a fair assessment, do you think, or is that just sort of an opportunistic take on it?
I definitely think the tech industry is trying to find a narrative here. And you see, well, it's all about dependency on China. I don't find that incredibly insightful because we've already known that is not something that's new. And I think what it actually ends up doing is it just adds more noise to the situation, because for a company like Apple, while China plays a very major role in its supply chain, its manufacturing apparatus, this is a company that has suppliers and partners around the world. And I think what you saw over the past couple of weeks is some of that diversification coming into play. We don't see, as of yet, severe supply shortages, despite Foxconn and most of Apple's other partners in China being offline for almost maybe a month now. That's pretty remarkable for them to be off that long. And you still are able to go and buy products. Now, of course, Apple's guidance, it may suggest that could change in the coming weeks or months. I think that's not that surprising. If you have Foxconn off of their production goals for 2-3 months, that is very difficult for any company, particular Apple, to get across. But yeah, I mean, kind of trying to make this about a dependency on China. I think a lot of people also forget that Apple does benefit from having a lot of its supply chain in China. You're able to get high quality manufacturing done. And for more importantly for Apple, you're able to get those products out the door quickly. It's one thing just to come out with a product, but to make 100 million iPhones or 100 million of something, that's something that's very difficult. And I'm not one of those people who thinks that Apple can bring that kind of manufacturing back to the US. There's only so many places in the world that can even support that. So my overall view is both China and Apple in this relationship, they're both benefiting here. And I tend to think a lot of the narratives, they end up being a little bit too narrow focused in a way.
Traditionally, or a typical year, Apple would have vast quantities of employees going back and forth to China regularly. They would be ramping up production. That was one of the things that they mentioned in the update, that it was hampering production. But the other part was that because of all the store closures in China, there was just no way to serve retail demand. How did those two things weigh for you? Is one as serious as the other? Is one global and one local? Or does the size of the Chinese market make them much more important?
Apple's Greater China segment makes up about 15% of the business. So there's no question that even mainland China does represent a good portion of Apple's product demand. When it comes specifically to removing guidance, I tend to think it probably has a little bit more to do with the production issues and not necessarily the demand. And the reason being, I think Apple probably had a pretty good handle on the demand issue. They provided guidance after seeing probably a week of the quarantine and some of the travel bans. And again, when you look at the percentages, you could run through certain scenarios where, okay, you assume a certain portion of demand is pushed off a number of quarters into the future. The bigger thing, though, is if you have iPhone production that impacts really the rest of Apple's business. And so if Apple is unable to, say, ship 4, 5, 6 million iPhones into the channel because of Foxconn's inability to meet required production, that's going to have a much bigger impact on Apple's quarterly results than necessarily the demand. So I do think both issues, they're there. they're impacting Apple, but I think the production side of things, that might have been the thing that Apple did not see coming, or at least did not expect to hit. And once they noticed that, okay, yeah, this is not going to happen, we can't just flip a switch and then have production ramp up because of the quarantines, the travel bans. There's reports coming out. Almost everything from just simply moving product around is taking longer. That's going to result in Apple not being able to meet its production goals for the quarter. And there's also a consideration with new products. There's rumors of a new iPhone model. From a financial perspective, if Apple doesn't ship that product, or at least doesn't ship as many iPhones of that new model in the second quarter, well, that could impact the guidance. That could result in lower results and pushing revenue into the third quarter of 2020. So at least from a financial perspective, I think the production side is a little bit more interesting from what Apple was initially expecting.
So as of this morning, we saw companies like Adidas start to make similar statements. How much of the story is an Apple story, and how much of this is a technology story, and how much of this do you think is just going to affect consumer products globally for the next month or two, if not more?
Well, I think you have global companies that this update, this news, it definitely shows that it's very difficult for a global company to not escape an issue where you have such a health outbreak or a health crisis like what's in China. And I think you could raise some concerns that this will impact global growth, as you were talking about earlier. Tourism, travel, that's something that's going to take some time to play out. And I think there's concerns that you're not going to have things bounce right back. It's going to take a while for countries and other companies to get back to normal. In terms of Apple, I'm not so much, I don't think it's necessarily an Apple specific issue. I mean, most of these companies in the tech industry, you look at maybe even China brands, China smartphone, this is going to be pretty brutal. And at least with Apple, you have diversification. You have 85% of Apple's business not in China. Obviously, the production side of things, that's why I think the risk is found with production, not necessarily demand. But for other countries, they don't have that type of diversification demand. And so you're going to have a lot of these impacts last over time. And again, there's a certain amount of unknown here. And so we're trying to kind of figure out, well, what's going to happen 2-3 months from now, maybe even a year from now. And at the same time, I think people are still trying to figure out what exactly is going on with this health crisis, and in terms of its risk to other countries, in terms of spreading, how to contain it. So I think there's a lot of moving parts here. I think from Apple's perspective, it's fair to say it's just a sign of really how interconnected everything is. You have a U.S. company that really, nowadays, it's tough to even call it a U.S. company.
Yes.
I think of Apple more as a global company, just with its headquarters in the U.S. And an episode like this shows that you have one country have a certain health crisis or outbreak. It's going to be very difficult to keep that contained to just one country. Everyone's going to feel, and I think that's one factor why everyone needs to pay attention to this. I mentioned yesterday here in the U.S. I live in New York City. It seems like there's more attention now going to the seasonal flu, which is really bad, than coronavirus. And so, to a certain extent, you don't want fear to be rampant, but I do think there's an element of, I think we need to focus kind of on some of the basics even, and not necessarily get so distracted by other things. It's something that in today's age, I think it's just a sign of the times, really, where, a lot of publications, a lot of people, they're kind of rushing out to try to get a very particular take or very particular angle. But at some points, you just want the basics, and that goes a long way. Just knowing what's going on, what isn't going on, taking it from there.
So last question, what are you going to look for going forward? Are you going to look for the shareholders meeting that's coming up when they actually start getting closer to Q2? Are there any sort of signposts that you're waiting for?
I'm going to assume what I think Apple is going to report, and that comes from knowing how many products Apple already sold. You could think of it as the second quarter is January, February, March. We're already halfway through. And so you can make an estimate as to how things occurred in January. You could then take news of Foxconn. I know there's a lot of noise coming out of supply chain, but if you can get a basic overview, like, okay, Foxconn is at 20-30% production capacity, you could come up with some estimates for how sales are going. Again, taking into account Apple's diversification, okay, there's going to be certain products that probably aren't going to be impacted by this. And then what I'm going to be looking for is, once the quarter ends, do you see any comments from Apple? I don't necessarily think those comments are going to come at the shareholders meeting, but it's possible Apple provides updated guidance before reporting earnings. This is where you can pay attention to other companies as well, see what other management teams are seeing in China. So it's kind of like a mosaic theory here. You're taking a lot of clues from different subjects and topics, putting them together. I think longer term, I'm a little bit hesitant to change much regarding, say, my 2021 estimates. I think it's just too early for that. We don't know what the impact is going to be over the long run. Instead, I'm going to be paying attention to things like, if there's a new product launch, is that going to be delayed? Is that on time? That's going to help my third quarter estimates, my fourth quarter estimates. And then, of course, we have later this year, you have the annual, or I would say that the flagship iPhone event, new Apple Watch. From a financial perspective, obviously, there's a lot there. So there's a lot of things that I think I'm going to have to wait to see before making too many changes. That's usually what you want to. I want to avoid sudden changes up and down, and kind of, most of the time those tend to be overreactions. And so you take what Apple provided yesterday in terms of stepping away from that guidance. You make an assumption as to what Apple's business is actually trending at because of the coronavirus impact and the fallout from that. And then you go forward. You take a look at the news flow, and you kind of have to decipher what's relevant, what's not relevant, and take it from there.
All right, so if people want to find you on the internet, or they want to find your exceptionally good newsletter, where can they go?
Above Avalon, so aboveavalon.com. Probably the best way to reach out is Twitter at Neil Seibart.
Thanks, Neil. Where do you see all of this going over the next few months? Thanks for watching. See you next video.